It's Thursday.
Happy Thursday, everybody. This is your favorite crypto trading show, Crypto and Coffee with the Trading Bros. I'm your host, Clutch. We got some news from the Fed yesterday, and, you know, everything was kind of mixed. So let's jump to the charts, let's have a discussion, and let's see what we think is going to happen. B. Wellington, what you got, man?
Well, thank you for that great introduction. I mean, you're very excited today.
And don't be
Uh,
biased because you're currently in a short.
don't you be biased because you just got into a short.
I did, but
I mean, look, I wouldn't recommend anybody getting into a short unless they're prepared to be in it for a little bit. The short that I got into was, uh, can I admit it? It was a boredom short.
okay. Boring trading.
Where you put a little bit in and you plan on building it, because we are in this range. So this is the hourly. We normally start off with the daily, so let's go ahead and do that. The boring daily chart. But this does tell a story because we do have a range. Forget all these lines in between. Let's focus on these two, which are this line here on the bottom, which is 875 or so, and then this line up top, which is this 1270 area, 1280 area. And so this is your range, right? And so we spent a lot of time on the upper side of this range, right? On the upper half, we have not revisited this wick at this point. At some point, we're going to revisit this wick, right? And so we may come back up here. If we do break out of this range, I expect it to be somewhat trappy, bring that back down, but I don't expect us to really move up, from here. Now, does that mean that it won't happen? Could happen. Anything can happen. Nobody knows exactly what's going to happen in the market, but based upon our analysis, if you look at all of the volume that's coming in, all the volume, significant volume that's coming in, is coming into the downside. And when we do get these little pumps, relative to the upside, they always come back and take back all of that. That's all your money in there, all that volume. That's all retail, and they come back and take that with one or two candles to the downside. So as you can see, we're kind of going through the same pattern now. Technically, you could say that we're forming kind of a wedge coming into here, and then depending on which way that it goes. But we'll see. There's still a lot.
So that range you're looking at is like 1280 down to like 991. Is it kind of
Correct.
the area that we're the range that we're in right now?
Correct. And we're kind of smack dab in the middle of that piece of it. And so these yellow lines here, this is the daily open. This is the current daily open at 117, and then we've had or 117 at the 17 area, and then this is last week's daily open. I've been trying to keep track of those as well as some of the sessions, to see how the sessions interact, see how New York interacts with everyone else, and vice versa. And so, it's been an interesting area so far. So this is the hourly. So again, you can see the range a little bit more clearly on this chart. So we do have the daily open up here, and we're kind of below it. At this point in time, we've come down here. This hasn't been a lot of activity. Again, yesterday's low is still in sight. We bounced off of the 200 EMA, which we tend to do. We've had these breakouts and these pullbacks, the breakout and this pullback. This one we didn't have the breakout. Let's see if we get the pullback. Ultimately, what I think a lot of people are anticipating. So there's two sides of the market, I would tell you. So there's the institutional that is trying to trap the retail, and the retailer that's trying to avoid to be trapped, right? And so we're the retailer trying to avoid not being trapped. I will tell you though that as soon as we start building shorts up here, retail has started to increase their shorts kind of overall, but retail is also very quick to jump sides when the market goes into the wrong direction. And so that jumping, I think, is going to prevent us from really having a big run up. Now, again, it could still happen depending on what, human behavior is like. But I think the market's a little bit too fresh. People have lost a lot of money. And when they see it going to the upside, they don't want to miss out. So I think a little bit of FOMO happens. So even though people are wanting to short, I don't think that they're holding the kind of conviction in those shorts that they would in a long, given the range that we're in. And so I think that's going to prevent us from going up. I think that institutions really, based upon this behavior, is going to bring us down even further to basically take retail back out so that we can get things going. And let's not forget that the macro market is still out there. CPI print was high. A lot of pundits are saying that, we've reached peak inflation and therefore, the Fed may not do, what they say they're going to do. I don't buy into that. I don't buy into peak inflation. We still have a war that's going on in Russia and Ukraine. We still have higher energy prices. They just cut the natural gas line out in Germany, which could cause some issues. So, there's still a lot of uncertainty that's out there. And so I would say that there's still a lot of event risk out there. When you have event risk, you want to be playing it to the short side, or at least to the downside, because that event risk can be negative, right? Like, so that's kind of my overall, if you want to talk about the psychology of the market. If we look at what's happened just today, we had some nasty moves yesterday before that CPI print. And so all this, this big wick here that came in, this was a clearing out wick, came up to bust out some liquidations and then came back into it to bust out some of those shorts and then moved back up into this area. And so we've broken this range here, but still having some issues coming through this 800 on this is the 14-minute, this 800 on the 14-minute. We rejected off of that. So I would assume that this is kind of the 200 on the 1 hour. And we've also kind of come below the 200. So if we then come below this, reject here and come back down, I think we will, visit these ranges down here. I'd be interested to see what Bookmap and High Block have to say. But, as we moved up, we rejected off of here. Therefore, we could come back down. Once we get below these moving averages, it becomes very hard for them to come back in. We'll have to see if this is a trap for shorts, which some of the data will tell us, or if this is going to continue down like the trend that it's talking about right now. If we look at things like OI is at 3.9 billion, so OI hasn't gone anywhere. So we're participating at the same levels that we were before. And so at these levels, there's still more equity to take out, not equity, but there's still more liquidity to take out. We look at funding rate, we're still, let me just refresh. We've got a few of the exchanges that
all the monkeys are going long on Bybit.
Right. So the apes are going long on Bybit.
Oh,
apes,
so like it's called.
So like I mentioned, they're very quick to switch positions. Of course, this is a sentiment meter, just kind of see where sentiment's at. But I still just don't think that they're ready to take it up to the upside. I think there's still too much retail participation on that end. Going to look at the market, was just open. Good Lord, we're down. We've had a sell-off in the market. I didn't have a chance to look at the futures early.
Yeah, futures were negative prior to open.
Yeah, so this is a big number. These are big numbers headed into the open. So we just opened. This is a sell-off. So I'd be interested to see if yesterday was the actual trap for the longs. People that, I just heard a lot of interpretation that this was the peak relative to inflation, and therefore the Fed was not going to do what they're going to do. What I believe, though, is, housing still hasn't hit. Employment's still good, which means the Fed still has room to raise. They're talking about 100 basis points versus 75. At this point in time, and I think that's being absorbed in the market as well. Let's see if crypto follows what the market's doing, because the market's a lot further down. Now, in the first 30 minutes, we really won't know what the market's going to be doing until about 9:15, 9:30, when everything settles, because we are in the beginning stages of the market. And so
let me ask you a question real quick. I have a question I'd like to ask you. So with we don't know for sure that we're doing the full 1 point hike on the with the Fed coming up here
But
next week.
We do know 75 is in the cards.
75 is in play, but do you think that these big institutional area, the people that's got a lot of capital that can trade, do you think that maybe they think if we can get the market to go down far enough that maybe we can reduce the amount that the Fed's going to do the hikes in?
Yeah, well, the market definitely is reacts to information as it comes. And so this CPI print that came in, coming in hotter than expected, it's really about, what an institution's job right now is to be able to, read the Fed relative to the next moves. And I will tell you, just looking at, some of the commentary from other, channels, CNBC, NBC, all the money guys that are out there, institutions are now considering more a 100 basis hike versus a 75 because of the print, and because in August we don't have a meeting, and therefore if they don't get it under control in this next meeting, then they're either going to have an emergency hike, or emergency meeting in order to do something which they don't like because they don't like surprises in the market. So that's the other thing I'll tell you is that and looking at some of the commentary from some past Fed chairmen, they don't like to surprise the market. And so they try to leak, if you remember last meeting, they leaked out the increase prior to it. I think they did through Wall Street Journal. And I hope they might do it now. And so to help the market ease its way into these rate hikes versus having any type of surprises. So it wouldn't surprise me if we got a 100 basis point increase on this next one, but I think they'll start leaking that early so that we can prepare for it. But obviously, we're reacting to that, today. We'll see how it actually ends as far as the session is concerned. But I think everybody's long-term view is that we still got some more downside to go, but may have a short-term reprieve coming in. But who knows if that short-term reprieve comes in, given the fact that retail is still so heavily on board, and there's still a lot of that. As far as the crypto market, there's still a lot of unknowns relative to 3AC. Celsius, who's paying down debt. People think that Celsius is going to be okay. Personally, I think what they're doing is trying to reduce some of the obligations before they go through some type of bankruptcy. But I don't have any inside information on that. That's just my own opinion. But I think there's still a lot of unknowns. So if we're talking about crypto in general, when you have unknowns, you have these rate hikes. We also have price earnings coming up for corporations in the stock market, and so how are those earnings going to be? The big retailers are going to be affected somewhat. Energy is probably going to be up. Housing is probably going to be down. I mean, we're going to have a mixed bag. Technology is probably going to be down. Earnings season is going to be very mixed, and so that in itself is kind of a lagging from what's happening now as far as the earnings are concerned. So we could go down further from that. Was that a long ass answer to your question?
Absolutely, it was.
So we've got continuing job claims, initial job claims, and producer price index final demand monthly, right? So these numbers here, so the PPI came in higher than expectations. The initial jobless claims came in higher than expectations, right? Which these are actually good signs relative to the economy, which tells me that, that the number that we had before may have actually peaked out a little bit from that, because once you start getting higher jobless claims, that means demand destruction has actually happened. That means that there's a contraction in the job market somewhat, which is good, because when you have more jobs that are available than people want to work, then that increases the wage demand, right? So then wages have to go up. So therefore, corporations have to pay that, and it's more competitive, right? So us as being folks that are kind of on the other side. We kind of represent the employee side of things. That's good for us, but not good for the economy, because then you have service industries that also have inflation as well. And so I think that, that's a big reason for the Fed to start to increase even more. But I think what they're doing so far is helping as far as demand destruction is concerned. I'm not talking about, the health in the economy or anything like that, but I'm just talking about, inflation wise on the employment side, as far as what the Fed can do. Definitely moving the demand curve down relative to the consumer. We'll just see how the consumer reacts, to that. I feel like I took up a lot of time this time.
You did, but it's all good.
But so that's all I got on my end. I do expect us to head down, and try to get into these wicks. But again, it's we're still early in the game. What do you got, Clutch?
Let's check it out. Okay, so let's slide over to screen 2. Let me know when you can see this chart. High block capital. So here's high block capital. So something very interesting. As you guys can see, that movement that we made yesterday afternoon, where we wicked up into the around 11:20, created a bunch of long liquidations. As you can see, we came down and pretty much got all of them except this big area that's 71 million and 47 million at 1068, and then we have another big guy down here in the 11 or 1048 area. So something really interesting that we want to pay attention to here is a lot of buyers still in this area. A lot of buyers. So that tells me that a lot of people are still trying to go long. So that also tells me that they may go ahead and continue to bring that price down, because they have these people trapped. I got a lot of longs still trapped in the market. We got the 79 million that did get taken, but again, 47 million at 1.68, and then we have some more down here in this 1051 area. So based on this, I'm expecting that we do see some lower prices. However, we do have a pretty nice little gap here in liquidation. So we may also have more of kind of a choppy ranging day happening as well. So just be kind of mindful. Big key areas that we really want to pay attention to here. So right now we have guys trapped up in the low 11 teens. So right up here in this area, 11-16. So do pay attention. We want to see a break from that to see if they're not worried about trapping longs at this point, because right now up in this area we got a lot of longs trapped. But we have had them move down here to where we're at now, down in the 10. We're sitting about 1080 right now for the price, and then also down here around, believe it was, we look over here at this other chart, the last low that we had is 1070. So we definitely want to see us break 1070 if we want to see some lower prices. We weren't able to do it while ago, so that does also lead me to believe that some of these shorts are also trapped. So again, probably expect some ranging. 1070 break below is an area that we want to pay attention to for some more downward momentum. However, if we don't get that breaking this 10, we actually wicked all the way up to 1026. So we want to see us get over 1126 today to get some confirmation that the
your chart looks like a Ouija board.
Yeah, I know. Well, I know how to read it, so that's good. We look over here on Bookmap. As you can see right now, we came down and we tested this area. We did get some rejection, but right here, as you can see, these were just some long getting on board. So this may just be a stop hunt back up into this 1085, 1090 area. And if we're going to look at the chart volume profile here, let me get this set up, refresh. 1092 is kind of the end of the area that we've been looking at. We do have a lot of orders up here at 1098. We also have the VWAP and the daily opens also up above us in this area. So there's definitely a possibility that we could definitely get a little bit of a run up here. This 1089 area that we're slowly approaching will kind of help tell us that. But again, there's really no volume coming in here to the market. So momentum wise, I mean, we're gonna have to scroll out here to get a bigger picture of kind of where they want to go. As you can see, they do have 1090, 1100 are some areas that we have some liquidity that's open, but we also have stuff down here at 1070. And if you want to go out even further to get a big picture of the trend that we have as far as liquidity goes, same story that we've been seeing. Everything is to the downside right now. Really, I pay attention, guys, as far as Bookmap's concerned. 1100, we get above 1100, we start getting some more orders. If you guys have Bookmap, be paying attention to that. These orders start sliding up. But 1100 is kind of the area for rejection right now, so do pay attention if we do get it into that area. 1, 2, if they start sliding these orders and baiting this to go up. However, if we do get that rejection off of that VWAP, because that VWAP's sitting right there as well, expect some more downside area. And there's a lot of orders down there at 1076 as well, which we do need to break below that to see some lower prices. So right now, 1076, 1100 are our key areas to pay attention to for intraday trades and where we're going to be heading in the short term. And that's all I got.
Well, that's cool. I agree with you. I mean, all signals say to the downside, but also remember that when all signals say to the downside, sometimes it goes up because everybody, folks are seeing what we're seeing as well. But we're trading off liquidity. We're trading off of what's out there right now, along with what's consistent with different chart patterns. And so, be careful. Risk reward is probably going to be your best metric relative to trading. So make sure your stops are in the right place, not where everybody else stops are, but where there's the least crowded trade, and just use good risk management, and you should be good.
This whole area right here, by the way, is a very, very crowded area, by the way, as well. If you can see this chart volume profile, session volume profile, a lot of people that getting orders filled in here. So this is definitely, if you're looking to get into a trade, wait till we get to 1092 or down to 1072, and then see which way market's going to be heading. Because right now this could easily go either direction. So be patient and wait till we get to those areas, and then wait to see what the market's going to do. Because I will tell you this, with this much volume and everything in here, they're definitely trapping one or the other, so there should be a nice move either up or down out of this probably today, but they are going to range and get this as many people trapped and filled as they want to, and then they'll make their move. So stay frosty, my friends. So that's all we got. We'll see you tomorrow, same time, same place.
Am I gonna have to hear that every time now?
Yes.
Stay frosty. Okay, let me prepare myself. Okay.
Until next time.